As the war in Ukraine triggers a surge in food and oil prices, growth projections for the region have weakened as countries struggle to balance inflation versus growth.
As the managing director of the IMF likes to say, the war in Europe is hunger in Sub Saharan Africa and Africa. So I think we should pay very close attention to this issue. Even if you are an oil exporting countries, and you can benefit in terms of your macro situation, that doesn't mean that everyone in the country will benefit. And I'm saying this because prices of fuel are going to increase, and that can be harming segments of the population. Prices of food could increase as well.
While the region's economy is expected to accelerate in 2023, with growth trending at 4%, navigating 2022 is the priority. In Nigeria, the country's Monetary Policy Committee had to shelve its policy to strengthen Nigeria's post-COVID growth by increasing interest rates by 150% to check skyrocketing inflation. But addressing the economic impact of the war in Ukraine without adding to debt vulnerability is the bane of the region.
Our own analysis is that there are already 15 million people in acute need of food support in the country. And this in Nigeria, 15 million. That's our own so-called cadre harmonisé that our OCHA colleagues produce. And that was before the Ukraine shock. The prognosis right now is that this may rise to 19.5 million. So again, these are people, there's a lot more people food insecure. Basically, all the 80 million who live below the poverty line in Nigeria are food insecure.
The crisis in Ukraine is a positive for oil exporting countries, especially with crude oil prices expected to rise further. In Nigeria, however, the reverse is the case, as higher oil prices translate to higher fuel subsidies. The quagmire is worsened by rising debt levels.
You ask how do we prioritize expenditures in such circumstances. As of course, as you know, debt service takes priority, and your personnel cost follows. Thereafter, our current reality is that we are already in deficit, territory, and so that's why for us the focus is on how to grow revenues, how to to show up revenues.
In terms of how do you really increase that revenue, I think that's the bit that we have struggled with as a country, because I'm not entirely sure that we agree on what the strategies should be. And then we have too many people who are involved either as political leaders or policymakers who don't see the big picture, and they tend to be pulling in different directions. So which means you see a lot of efforts, but you see very limited results.
From managing exchange rate adjustments, a highly vulnerable population owing to slow vaccine rollout, insecurity, to the exodus of portfolio investors, the challenges are many and solutions are few, as the new shockwave caused by the crisis in Europe leaves little room for maneuver. Onyi Sunday, Arise News.